In general, we divide the motion schematics in each capture from the beginning to the end into 4 types. Number 1. Trend, moving the price from one point to another, whether it is low or high. Number 2. Trend to range, after moving the price is locked in a range. Number 3. The trend to correction above 50%, after the price movement above half of that movement returns. Number 4. Range, locking and playing the price in a range that is around 40 to 50 pips. If our range is around 30 pips or less, we call it sideways. We generally have 2 schematics classes. 1. Clear schematic. 2. Unclear schematic. For example, the most difficult schematic is the range. Every time it goes back and forth. If it ends at the same price, it is still the range, but the schematic is not clear. We use both types to detect seasons, but for other strategies, we use each one separately. As I said before, we predict the outcome and the general direction of the market. But this alone is not enough, and for accurate analysis and correct prediction, we have divided the market into separate and smaller parts to reduce mistakes, and we are more likely to be ready at the moment. In terms of psychology and trading, we consider the first and strongest probability to be 60%, the second to be 30%, and the last probability to be 10%, and always 10% or more should be considered for a violation in our strategy, even if it is the most powerful strategy of its kind in the world. 1. Trend. There are always 2 possibilities, and by examining the previous season of this season, for example, the roofs and floors in the previous season and other factors, it is possible to predict a large extent which one has a higher probability. It doesn't matter if the trend are ascending or descending, or it continues, or it can play on the point created at the end of the trend, the same range. For sure, if the season has a little movement, if the trend is to continue, we expect a sharper continuation. If there was a lot of movement due to the proximity of the price target in the next season, we expect less movement or a trend with less momentum. Because in gold, there is a measured and specific movement, and it is one of the main behavior of gold, which we will discuss in the future. The market is continuous and permanent. If we see a trend after 2 seasons, we should still wait. Well, it was a bit difficult. I have to say no because of checking the amount of movement. Maybe it is the highest and most logical mode of market return. That is why understanding the chart is the most important point of view, and zooming on the chart causes us to get the wrong impression. Number 2. Trend to range. We have a transfer that range a price lock in the middle of the season, or a double top or a double bottom at the end of the trend. The most important point in the schematics is not to preserve them, but to understand the behavior of the market. For example, in the schematic of the trend to range, the expression is that after the movement of the price due to the price confinement, the market considers the price to be sufficient so far, and we will experience temporary or long range in the future. We expect because the market does not want to change the price anymore. So, after the trend to range due to reaching the price target, we first expect a return, then range. Number 3. The trend to correction above 50%. That is, after moving more than half of the trend, we have a return. If the return is less than half of that trend, we have other expectations from the market, such as the correction of the trend and the continuation of the trend in the market. So, accuracy in the market is more important than maintaining the schematic. And these schematics are only for planning and analysis. We are in the trend to return above 50%. Due to the high return, it expresses the insignificance of the previous movement, and maybe the trend is in line with the completion of the movement step in the market or the price target, and the behavior of the chart is somewhat similar to range, and the highest probability is range we give, and the second continues to return. Number 4. Range. Regarding the range of 40 to 50 pips, we only consider the continuation of the trend, and maybe a fake breakout can be seen at the beginning of the season. In range, we use a special strategy for it, which we will deal with in the future. And in range, we need a reliable confirmation to exit from it, and it is not practically impossible. 5. Sideways. In sideways, we expect two modes. First, sharp movements up or down, and the second stage, the continuation of range. In Asia to London ranges, due to the stronger amount of capital in that season, we expect an increase in the range in London, and in the case of London to New York, we expect an increase in the range and even fake breakouts and shadows. It should be noted that range is considered the most difficult schematic in the market, and if you do not have the ability and tolerance for it, is better not to trade in these seasons. The main cause of each season of range is the previous season. Therefore, we must look at the previous season in the analysis of the future of the market and in the face of our range. If it was range, we will take a look at the previous two seasons to see if the settlement has been made or not, and in the current season, most of the touch is above or below the range, or the ceiling and the floors tend to be higher or lower. I got a bit complicated and we will deal with it more in the future, but for us amateurs it is better to consider the continuation of the range, or if we have another strategy, then we will change the strategy, which we will learn about in the future. Type A. If the previous season was the trend, then this season it considers this range to be sufficient and we only expect a return as a strategy, and the continuation of the same range in the second stage. And the opposite means that it is against our strategy and unacceptable. Type B. In the previous season we have a trend to range, and since the trending target has been reached, we expected a return. But the current season has been range, and it shows that despite reaching the price target this season, it has no tendency to return, and the trader's decision in the future, it will be a continuation of the previous process. The strategy is first to continue the process, and secondly to continue the same range. Number 8, or type C. The best strategy after the two sideways is sharp movements and a lot of movement, just like the Dow Jones symbol. In the case of the sideways, by checking the ceiling and floors. Due to the low amplitude of its oscillation, it is better to predict the future after that if a signal is given. Therefore, it may not always be possible to predict the movement by looking at the previous season, and it is necessary to look even earlier because the market is continuous. Practice. Cut the market to Asia until 10 o'clock, from 10 to 15 o'clock, from 15 to 19 o'clock, and the 19th of the market. We consider the four main schematics. By only the behavior of the normal range is almost separate from the side range. Schematics for at least 6 months, and considering two modes for each schematic as strategy and obtaining relationships of each season with other seasons as percentages. These schematics are the basis of the market, and if they are reviewed for 2 years, this discussion will enter the blood and mind of the trader.